We're going to talk about a level 5 business, which is a business doing less than 15 million. So assuming that we have roughly 20% margins, net margins, we're talking about the cash flow of the business getting close to 3 million a year at a 20% margin. Again, we've got the multiple expansion that we've talked about throughout this. On our previous stage, we had a multiple between 5 and 6 times, and here you see the multiple jump again to somewhere between 6 and 8 times. And if simply do the math, if you've got a business that's generating 3 million of cash flow and it's trading for 6 times cash flow, that means the value of the business is worth around 18 million. If it trades 8 times cash flow, that means the value of the business is 24 million. And so, I mean, we're getting into businesses of significant value at this point. In terms of the buyers of this business, similar to level 4, we've got our 3 sets of buyers. We've got our private equity guys that are doing roll-ups, consolidations. We have the strategic buyers, which are similar companies in the space that are looking for acquisition growth as a way to grow. And then we've got the owner operator buyers. And clearly these businesses are too large for an owner operator. They're very attractive to both private equity firms that are doing roll-up consolidation plays, and for strategic buyers, they're looking for acquisitions to grow. And so the buyer groups are well defined. The ability to determine who specific buyers are, both on the consolidator space and on the strategic space. There's a lot of data and there's a lot of information out there. And so you're able to identify who those buyers are, and you're able to run an effective process in terms of marketing the business to those buyer groups. And it's a very efficient sales process at a business of this level. When you look at the org chart, I mean, the org charts, you've got as many as 40 employees now. And so the org chart is really beginning to fill out. As we talked about previously, a company that moves from a level 3 business to a level 4 business, you've got at a level 4 business, you've got upwards of 20 employees, which is too many for the owner founder to run, and they've got to put management structures in place. They've got to put departments in place. Certainly when you double the size of that for an employee count, you need to expand that. And probably the quality of the management team in order to manage the personnel that are underneath them. You maybe even need to upgrade the managers that are in place and get either help those managers grow in terms of what their capabilities are, or to hire new managers that are capable and they have experience in running larger teams. So you've got a sales department with a sales manager and maybe an estimator that's working with them. And so the sales manager might have 3 or 4 people that are reporting to him. At this point, you've maybe brought the marketing in-house, and you've got a chief marketing officer that's running your marketing program. You might choose to continue to outsource the marketing functions, and certainly that's an option, but marketing is critical at this point. In terms of what the operation team looks like, the operation team needs to expand. The client support team needs to expand. There's a client support manager, and they might have a handful of customer service reps that are reporting to them. The operation manager, more than likely the director of human resources is going to report up to the operation manager. And so when you think of HR, again, and we've touched on this before, I think historically HR It's been more around payroll function and a benefit function, but HR is much more than that. It's about uh, helping build and instill the culture within the company. It's being sure that there are processes and procedures in place where all the employees feel heard, they feel valued, and they see career paths in front of them, and their regular performance reviews and two-way feedback loops that are put in place to assist all from a retention standpoint. Recruiting becomes much more critical. The ability to recruit new employees in various departments becomes critical, and have an ongoing recruiting process to help the expansion of the company is important. To have a formalized training program to be able to onboard these new employees as they're coming into the company. And as I mentioned, the benefits and the payroll are also some of the responsibilities that the HR function is responsible for. The finance function changes. The finance function becomes much more important. Instead of having a bookkeeper or having a controller, you're probably going to have a more senior controller that's managing the finance function. You're beginning to think about even hiring a CFO, which has even more responsibilities, not just in terms of the historical analysis of the financial performance of the business, but help you as a business owner do projections and help with pro formas and help with growth strategies to help move the business forward. And so at the very least, you're going to have a controller, and the controller might have a bookkeeper that reports to him or her. And maybe at this point, you're even thinking about hiring a CFO to help you with more of those forward-looking strategic functions. The field management team dramatically expands. You've got an install group, you've got a service group, and you might have as many as 20 or 25, maybe 30 employees that are working out in the field. And so having a clear org chart, having clear managers, having clear reporting lines, it is vital because of the size of what your field workforce is going to look like. The owner's responsibility at this point is vastly different. A level 4 company, owners have removed themselves from the day-to-day operations of the business, and they have managers that are managing the various functions of the business. At this point, the business is far too large for the owner to even attempt to manage something this size. And so he's been performing at this strategic CEO level for a while now, and he's got process and procedures, and he's got the right people in the right seats. He's got the right reporting structures. He's got the right meeting structures. He's got the right KPI structures. And so the owner is getting very comfortable with working not in the business, but on the business, and managing the business from a strategic CFO standpoint. And so it's a role now that owner CEO should be very comfortable with at this stage. But it's a much bigger company now. It's a much more complex company now. The owner's responsibility changes. The size and the quality of the management team changes, and the number of employees that are supporting the various functions within the company change as well. Employees we've talked about, around 40, maybe more growth margins. We're going to continue to grow the business at a 20 to 30% growth rate. Our gross margins should be in excess of 40%. Our net margin should be in excess of 20%. The owner is focused on marketing. He's focused on sales. He's focused on operations. He's focused on culture. He's focused on people management at this point. He's got a robust process of KPIs and metrics that he's managing the business from. He's spending a lot of his time thinking about growth. He's thinking about additional service elements that he can add into the service offering that they have. He's maybe beginning to think about some acquisitions for the first time in order to either expand into new geographical territories or buy existing companies within his existing geographical market to expand. And this is a new area that the owner's probably never done before. And so the owner's going to get comfortable from an M&A standpoint in terms of how do you look at businesses? How do you value businesses? How do you structure what the transaction structure looks like? How do you line up the financing? How do you get these deals closed? And then once the businesses are closed, you've got to integrate the business and the employees into your company. And so the whole aspect of acquisition integration becomes much more critical. The technology stack continues to roll out. You've got to have technology, both from a CRM standpoint, from a field management standpoint, from a finance standpoint, from an HR standpoint. So the technology stack becomes much more robust and much more complicated. But the owner's been involved in the business as it's gone through these various growth stages, and they've educated themselves on what the technology stack needs to look like. They've got additional technology support around them. And so this is a comfortable transition for them. And I would say for the first time, the business is beginning to look like a self-sustaining, self-managing business. The owner can take long breaks now. He can go on a vacation for 2 weeks and turn his phone off. He can go away for a month and turn his phone off. He's got a management team in place. He's got reporting structures in place. And so the amount of dependency that the business has on the owner decreases dramatically. And as this owner dependency decrease and as the business becomes more self-managing, that's one of the big drivers that's causing the multiple expansion and the valuation of the business to continue to get higher and higher. And you're seeing this multiple expansion continue to grow. When you look at the various skill functions that the owner's involved with at this point, he's got acquisitions that he's involved with. He's helping with the technology and the data and reporting. He's got finance. He's working on the culture. He's working on leadership skills. He's working on operations. He's working on sales. He's working on growth strategies. So he's got a bunch of different areas that he's involved with. Maybe as many as 8 or 10. And as you'll see here also on a scale of 1 to 5, not only is the breadth of his activities continuing to widen, but his skill set within those activities is continuing to grow as well, because he's been doing these things now for a number of years. He's very competent in the finance functions. He's very competent in the leadership functions, in marketing and operations and sales, in the overall strategy. There might be some areas that he's not as comfortable in, such as he's just beginning to do acquisitions for the first time. And so, this is going to be a new area for that owner. He's going to have to learn the process. He's going to have to get advisors around him that can help him develop in his skill set within those areas. But this is fun and this is exciting, and he's continuing to grow as a leader and as a CEO. And so these are wonderful new challenges for that level 5 owner to continue to take on. So this is what a level 5 business looks like. It's much bigger, it's much more valuable, it's much more complex. There are many more employees. The owner's role and responsibility continues to evolve and change. But this gives you a clear idea of what a level 5 business will look like one day. So again, this is John Bartlett, and thank you so much for your time, and I hope this has been helpful.